We are live now on the StreamYard and here with the Passive Cash Flow Podcast. So, Karen. Sorry about that. I'm sure you get them mixed up all the time, right?
Oh, my whole life, yeah. Yeah.
Excellent. Thank you for coming on here, the Passive Cash Flow Podcast. We are live now on Facebook. I haven't been yet approved for LinkedIn. I put my application in, so hopefully I get approved. But tell us about yourself here and what you do over there with your company.
Hey, well, I help people take their retirement money from where it is and put it into alternative assets like real estate primarily, private placements, notes, different things, precious metals, performing and non-performing notes and things like that, trust deeds, all different kinds of things, alternative assets.
That's super hot right now. In the real estate business, right? One of our webinars we're doing Saturday is how to diversify out of the stock market into real estate. And the signups we're getting, the amount of interest and excitement about, a webinar is cool. It's really good for business owners like us. And I think people are getting a little tired of the volatility of the stock market and just looking for alternatives, it seems. You find that?
Absolutely. And that's what we offer. I mean, that we don't sell anything, like we're not selling any assets, but what we do is give you the opportunity to choose, and we're the catalyst, if you will, to take your retirement money and move it into those asset classes, because otherwise you can't. Like Charles Schwab or E-Trade or something like that, they'll only let you invest in the stock market, but we help you invest outside the stock market.
Right, exactly. And so many people think they don't have that option, right? I mean, I talk to people sometimes and say, oh no, it's illegal to self-direct your IRA. My guy at Merrill Lynch said, sorry, you got to leave your money with us. You can't do anything else with your IRA, just
Well, I mean, that's what they want. They make money on their assets under management. I get it, and they'll even call them self-directed accounts because you can choose any stock that you want, but it's not truly self-directed because you can't invest in any asset you want. You can't invest in a private placement or, this is what it is. It's like grassroots. It's people helping people. My IRA invests in your business, in your real estate project. Mm-hmm. And then, then you build up a community, and it's person to person as opposed to institutions, institution to institution. It's pretty cool.
Yeah. And, we buy inner city properties, Newark, New Jersey, Patterson, New Jersey, and people put their IRAs into it and actually make a difference in inner city areas of their IRA. And I think people appreciate that more than ever sometimes, right? Than just sitting in an index fund and going up and down with the stock market. You find that?
Yeah. When you can touch your asset, when you know you're making a difference in a community, it's a great feeling. Yeah.
Mm-hmm. And the self-direct space is so incredible. There's so much opportunity there. I think it's a great space to be in. And there's also a lot of competitors now as well. So how do you guys kind of set yourself apart from other self-direct IRA custodians?
Lots of ways. I think one of the ways, first off, is our pricing. You'll find our fees are really low, and people love that. We have a flat fee, so it's not a percentage of your assets. It's not that. It is a flat $275, regardless of the number of assets and regardless of their value. So our fees are great. I think what also people like is the service. When you open up a self-directed IRA account, you're trying to do a deal, you want to be able to talk to somebody, to talk to a person, and get that same person when you call on the phone. So we assign our transaction coordinators, alphabetically actually. So wherever your name falls in the alphabet is the transaction coordinator you get. And then you work with that person, not some call center. And our people have been around a long time, and they really know real estate, and that's been their lifelong background before we hire them. So they understand your deal. You're not going to have to explain your deal to our transaction coordinators. And that's just great, and we're accountable and with you every step of the way. People love that.
Yeah, I mean, it's funny. People contact us about self-directing their IRA, and they're like, it must cost thousands of dollars. We're like, no, it's actually pretty cheap. For usually a few $100s, you start an account and get your assets moved. And so I like that how you don't charge based on the amount of capital they're moving. I'm always a fan of that. It never made sense to me. It's almost like you get penalized for moving more money in, right?
Or having your account grow in value. That's what we want. Mm-hmm. We want you to be successful in your retirement. There's a huge deficit between what we have and what we need to retire. It's enormous. And so we want you to succeed. We're not going to try to take some of that away. It's just as much work to move $1 million as it is to move $100,000. It's a wire, right? I mean, maybe there are a couple little steps, but at the same, of verification, but at the same time, it's pretty much the same thing. So we don't penalize you for it.
Mm-hmm. No, I like that. That's great. That's great. So, okay, let's talk about some of the topics we are supposed to talk about here on this podcast.
Yeah.
We were talking about how the rules have changed, right? With the COVID now for your IRA, and in a good way. So talk to us a little bit about these changes.
Right. Well, the CARES Act came out, but even before, with the CARES Act, a lot of things changed. First off, early, like in November, we had a change in the amount that you could contribute to your account. So that increased. For example, for a traditional and Roth IRA, it's now $6,000 if you're under 50, $7,000 if you're 50 plus. So that's one. So the contribution limits were increased, and you can see all contribution limits on our website, which is uDirectIRA.com. But then with the CARES Act and with other things that have been going on ever since, required minimum distributions for 2020, they are waived. Now, a lot of your listeners may not be 70 plus, but if you are, just understand that if you don't need the money and you are being made to take it, now you don't have to. So you don't have to have that tax hit for the 2020 tax year. It's wonderful. If you need the money, you can take it, but you don't have to. So that is one thing that was waived this year. Also with the CARES Act, we've got something called the CRD, right? Everything is an acronym.
Yeah, right.
Yeah. It's a coronavirus related distribution, okay? And so what this means is there are two different ways. One is 401k, one is IRA, two different sets of rules. So let's talk about the IRA. If you have an IRA with a coronavirus related distribution, you can take up until December 31st of this year, you can withdraw $100,000 out of your account without a penalty, all right?
Wow, that's the big one.
Yeah, it's a big one. And you've got 1, 2, 3 tax years to pay the tax on that because you're going to get a 1099. But you work with your tax advisor, you've got 3 years to pay it. Now, I am not an advocate of taking money out of your retirement account. I'm telling you what, you need a lot of money to retire. I just calculated that given the current average cost of living per year, multiplied out times 20 years, which is about the average length of retirement, that you'd need at least 1.2 million saved to be able to say, okay, I don't need to earn another dime. I'm set for retirement. So if you don't have that, don't take the money out of your retirement account. You're going to need it later. But if really this is the last hope that you have, and you've got to take it out, you can. So just don't think of your retirement account as some piggy bank you can break at will. You're really going to pay for it down the road, because guess what? You can't just go stick another $100,000 back in your retirement account. You can't do that. You've got contribution limits. So, I mean, you've got 60 days to roll. You could take it, use it for 60 days and put it back. But 3 years later, you can't just stick $100,000 in your retirement account. So you can do it. Should you do it? I mean, it's your call, right? But it's available to you, and it's something that's happened since the CARES Act came out.
Yeah, that's incredible. And one of our investors, she recently did take advantage of that, and she has enough tax write-offs, I believe, to write off the gain over the next 3 years. So she sat down with her accountant, and she did need the capital, and her IRA is very, very well funded. And at the age of 70 as well, she was looking to kind of start moving some capital back over into her coffers there. So
that's so smart. She did it the right way. She had a plan. She worked with her tax advisor. She made it work to her advantage. I mean, kudos to her. And that was great. That was fantastic. But just make sure you go in with a real plan.
Yes, exactly. And because of your age or where you're at, everyone's tax situation is different. And it's funny. Tax is one of the hardest things for us to explain sometimes or predict to our investors. Depending on when they exit or how they invest, whether it's an IRA or cash. But I mean, it's just your IRA is such an amazing tool, right? And now to be able to really self-direct it and be able to put it in the things you have passions for is even more fun, because it used to kind of be a boring part of investing, and now it's a lot more interesting, right? By self-directing it.
It's so great. And by the way, I just have to go back to CRD for just one quick second, because I should mention, you have to be eligible to do it. So you can't just take it out. You have to be diagnosed with COVID or experience adverse financial consequences. I just have to throw that in there, about the CRD. So if the coronavirus related distribution, you're going to have to prove, not to us, but to the IRS at some point that you were truly eligible. So, okay, thanks for letting me throw that little.
No, absolutely. That's important. Important little nugget there. Absolutely. Well, I would imagine a lot of people could say they've been affected by COVID. So,
Yeah, sadly true, right? 48.7 million unemployed.
Yeah. But, and then also now we were going to talk a little bit about, I think, opportunity zones and UBIT. I don't know how much we want to get into this here.
Yeah.
But
well, ozones are off my radar because I mean you can invest in them with an IRA, but you're already getting tax benefits. People use IRAs to get the tax benefits of investing. So you can invest with your personal cash in the ozone. You can also, your IRA could invest in an ozone fund, but the only tax benefit you're going to get is the fact that your proceeds come back, tax-free in a Roth or tax-deferred. But I think it's really interesting to talk about UBIT, unrelated business income tax, and UDFI, unrelated debt financed income tax. That's interesting. And the reason, because when you're an IRA investor, I always say self-directing, it's like a game of keep away, right? You got to keep away from prohibited transactions.
Right.
Got to know the rules of the game to win the game. And UBIT or UDFI especially can really come up and just bite you in the bum, because you may not realize, hey, you just invested in this private placement. You're so excited. You're going to buy some commercial building with your IRA. You're going to be part of an owner. You got an equity share. Your IRA is an equity share in this commercial building.
Sure.
Sweet. But here's the asset sponsor doing their job, and they borrow money. They bring in leverage into the deal. Well, the percentage that your IRA earns that came from that leverage is subject to that UDFI tax. Boom, you didn't know that. They didn't tell you that when you invested. Now, a couple years go by and you get a little knock on the door from the IRS saying, oh, hey, you forgot to pay your UDFI. So then you talk to your tax advisor and you file a 990T, it's called. Now, you may end up owing no tax at all, but you're still going to have to go through the process. So know that if your IRA takes on a non-recourse loan, it's a special loan like a commercial loan. It's a loan not made to you, the person, but made to the IRA.
Right.
So if your IRA takes out that loan, the profit that your IRA makes because of leverage, that percentage of income is taxable. So talk to your CPA about it, your tax advisor. Just like you're telling me about this other woman, she got together, she sat down, she goes, okay, let's make a plan. That's what you always want to do when it comes to investing anyway. So make sure you do it now. And you may turn out that you don't owe any tax at all, but you still need to file if your IRA is taken on leverage.
Yeah.
And now there's UBIT. And some people call the whole thing, they call UBTI, UBIT, what? Okay. Where you can find all of this is on the IRS's website. So I'm going to type it here in the chat bar. irs.gov hub 598. So if you're on Zoom, you can see that irs.gov publication 598. You can read all about unrelated business income tax and unrelated debt financed income tax. So talk to you. But UBIT is when your IRA invests in an active business. So my IRA bought a franchise like a Tommy Pastrami or something. That's an active business. Maybe not today because of COVID, it's probably closed, but normally it's an active business. And then that active business is going to throw off this tax. But back in the day, we may see these days again, but in the day when you could flip properties, you could flip 25 properties a year, no problem, because they were available and you could do it. That's running an active business in your IRA, okay? And that can throw off unrelated business income tax. So what I'm saying is know that it exists, talk to your advisors, do your homework, still invest. It could be the best deal you ever made. These taxes don't necessarily kill your deal, but you have to put pen to paper and do the numbers and figure it out.
Sure, and it sounds like you can also write off the UBIT if you have some other tax expenses or tax depreciation.
Yeah. Yes.
Now our buildings tend to produce more tax depreciation than cash flow. Okay, so if the investors stay invested long term, they can, or maybe an equal amount, they can basically write off all their cash flow and still have some tax depreciation left over. So now in that case, can you use that tax depreciation to write off your UBIT?
Oh yeah, you can. Yeah, so your tax person will do that. Yes, you'll be able to take deductions. Yes.
Okay, so ideally, if you're if you're investing in the right type of real estate that gives you good tax depreciation, and you don't have a ridiculous amount of cash flow that you need to use your tax depreciation to water down, then you should be able to write off that any UBIT owed. And from my understanding, it's a pretty small percentage, you know, at the end of the day, right?
And it's, well, I mean, it starts off at the same rate as the tax rate. So again, it's, you know, not, I don't give tax advice, but I know it's around 40%, can be up to around 40%. So, you know, get tax advice.
Okay, absolutely, absolutely. And when someone self-directs their IRA through you, you can always maybe suggest some accountants or something like that.
Oh, absolutely. We have a list of them. And yes, in fact, we're having a couple events coming up with tax experts to talk about all sorts of things. So, you know, we're always doing events and teaching people and helping people become financially aware. We've got one thing coming up. It's called #adulting for millennials.
I saw that. Yeah.
You know, so not everybody, you don't learn. You could have an MBA. You don't learn how to take care of your personal finances. You don't, you know, you don't learn, how do I start a company? What do I do? What is my responsibility? And when you know, you go, oh, well, that was easy, but you just need to know. And that's, so we're constantly providing that kind of education.
No, I love that. You know, and don't even get me started about the education system. I think it's way out of date. You know, I went to college, I paid 150 grand. And let me tell you, I learned how to show up. That was cheap, right? And it was good school and all. I enjoyed it. I learned how to show up on time and work hard. And, you know, I made a lot of friends. I learned a lot of other things, but I don't remember Calculus 2. I don't even know why I had to take Calculus 2, you know, and all the stuff I learned, you know, the accounting, and like I have a CPA, I have a bookkeeping firm, you know, so college teaches you a lot of important things in life, but it definitely doesn't teach you how to run a business. And I was an entrepreneur major. So if that doesn't teach you how to run a business, then what will, right? So I think college needs to be hands-on learning. In my opinion, if you're going to be an entrepreneur major, half of your tuition should go back to you to start a business. That would have been awesome.
That's an education. Right? That's what self-directed IRAs do. I mean, once you've self-directed your IRA, now you take the money from where it is, you put it in a self-directed IRA account, you find an asset, you invest. Now you're watching that investment. You know, you're watching the return on your investment. Did my tenants, if it's a house, did they make their payment? I mean, do I need to have a third-party vendor go out and do a repair? I mean, you really are watching this, learning the whole time, like, oh, I didn't know that. Oh, I didn't know that. And then you start watching podcasts, and everybody who's learned from the School of Hard Knocks can advise you and tell you about how to actually manage your asset. But with the self-directed IRA, that lets you do it. And then you're saving for later. I mean, you're being your own best friend. Because I'll tell you what, retirement comes at us like a freight train. You think, oh, I'm young, I don't have to worry about it. But the time to plant a tree is either today or 10 years ago. So plant that tree, you know, and save. And make a contribution to your IRA. We just passed the deadline for contributing, you know, for 2019 contributions. But, you know, pay yourself instead of the IRS. A lot of times you get a tax deduction for doing it. So that's another time. Work with your tax advisor. And, hey, if you're going to write that check, may as well write it to yourself. Right. You
know, that's so important. I read the book Rich Dad Poor Dad about a little over 10 years ago, right? Ever hear that? I'm sure you've heard of that. Everyone's same story, but, you know, really did inspire me. And I can't believe, you know, after $150,000 college education, that a, you know, 2-day read of a book actually inspired what I do today. It taught me more about wealth and money and how wealth is created by having wealth and how to, you know, make money, have money, make more money. And it's so interesting how we're really not taught that at all in college. We're not taught how to do our taxes. We're not taught how to balance a checkbook. We're not taught why the 1% get richer and the rest of us think we need to get more jobs and work more hours to become wealthy. That's not the solution. It's to make your money work harder and pay yourself, right? So what you said there, pay yourself. There's so many millennials, not to knock on them. I'm 33. I can make fun of millennials all day long. But, right, pay yourself, right? I bet you if you lined up 10 millennials and you said, hey, do you pay yourself every year? They'd be like, yeah, I go on a vacation. Yeah, I go out to a fancy dinner, you know, and yeah, I have this BMW. No, pay yourself, put it away, put it in an IRA, put it into real estate, put it into an asset class that's going to make more money, you know, and that's it. Whether it's whatever you could do, 10%, I try to take 50% of my income personally and put it into assets that make more money, which is heavily real estate. But, you know,
I love it. I mean, that's why we're here, because we love real estate, you know.
Oh my God.
All different asset classes, right?
Yeah, yeah, absolutely. I mean, I'm really not a stock guy. I don't really understand stocks or have any passion for it. But, whatever your asset class is, as long as it's creating cash flow, a dividend, tax benefits, then that's what it's all about. But it really, I think you nailed it with, educating millennials on what paying yourself is, what that means, and when is that event?
Oh, that's coming up July 23rd, so it's right around the corner. It's next week. And if you go on Facebook to uDirect IRA on Facebook, we have a group, and you can register there.
I love it. I love it. That's a great market to be in. I think that really we do, whether you're a millennial or not, I just think, yeah, we need to educate more on how to pay yourself, what that means. And all right, great. So we covered then some new updates on COVID. Are there any other updates from COVID that you can think of right now that you want to breeze over as well?
Well, we had the extensions for filing the 990T extended, but now we're past that date, so it's not really relevant. But I think the CRD is really the big thing, and also the RMDs. So that's really super important. But I think let's just talk about self-directing and a little bit to kind of, don't be intimidated by a self-directed IRA. It's completely manageable. It's a 3-step process, essentially. Open an account, takes a day. Fund the account, when we're waiting for the money, can take up to 2 weeks, but usually not that long. And then invest. So while we're waiting for the money to come over, we can be reviewing your documents and getting everything queued up to fund that investment. Then 100% of the proceeds go back in the IRA that owns the asset. And if there are any expenses of the asset, like if it's a house, there's nothing but expenses, right? If it's real estate, but if you need to improve, taxes, whatever, those expenses must be paid for by the IRA. You can pay the fees personally, like the account fees, but the asset-related expenses have to be paid for by the IRA, never you personally, because I told you it's a game of keep away. If your IRA commits a prohibited transaction, game over. Your IRA gets dispersed to you as though you had earned the money, maybe penalties, excise taxes, it could get a little ugly. So follow the rules, and that's what we do. We talk to people all day long and tell us about your deal. What are you looking to do? And just to hear if it sounds like a prohibited transaction, because if it does sound like a prohibited transaction, we want you to know that so that you don't make a mistake.
Right, and that's so important to work with the right IRA custodian that guides you properly with that. And that's just, not only is it required by law to work with an IRA custodian, because you cannot touch your IRA or you get taxed, of course, but the guidance is priceless, right? And I always find it funny when people tell me, oh, can I avoid the custodian? Can I just, go shortcut it? I'm like, well, really it's worth the few $100s you're paying to open an account. And it's like going to a consultant and or a financial advisor of some type, and it's worth the weight in gold.
We're going to be looking at every deal, at every deal that goes through. We review it. We give it a compliance review. If you were your own custodian and you're doing it yourself, you wouldn't have the benefit of our eyes looking at your deal.
No, that's exactly it. It's like having any type of professional look at an opportunity. It's a whole other set of eyes. So yeah, I love it. I love it. All right, great. So how can people contact you?
The best way is to go to our website, and uDirect, the letter U, uDirectIRA.com, and then boom, there's so much information. Sign up for our newsletter. info@uDirectIRA.com is a great way to get a hold of us. Telephone 866-538-3539. All the regular ways. So you can, smoke signal, it doesn't matter. Just get a hold of us.
And you're located, where are you located?
Well, we have accounts in every state in the nation, but we are located in beautiful Irvine, California.
Ah, lovely, lovely.
Excellent. The tree of Irvine right there.
It's always sunny there, I believe, right?
Oh, it's pretty nice. I'm not going to lie. Why do we put up with craziness in California? It's because of this. It's really nice.
Right. That's why taxes are 6 times everywhere else, right?
Okay, now I got to go cry or drink something. I don't know. But yeah.
No. We love California. All right, excellent. So we covered a lot of information today, ways to work with new rules due to COVID here. If COVID's affected you, it sounds like there's a lot of benefits now. You can pull from your IRA and work with your CPA to make sure you don't.
And I put a link to that, by the way, in the chat room. So if you want to see, the CARES Act and how it impacts your retirement, I put a link in the chat box, so you can click on that. Yeah. Awesome.
I love it. No, and it's such an interesting space because there's always new rules coming out and new opportunities coming out. And I believe, the IRS and the government is trying to make it easier to self-direct your IRA, and it's becoming more and more popular and more common. And, you know, it's a space right now that isn't overly regulated, you know, at least in my opinion. I'm sure there's many opinions about that, but it's a little easier, right, than other things you can do. So definitely contact Kaaron, right?
Kaaron.
Kaaron here,
Boom.
and uDirect IRA. They can help you out with self-directing your IRA. And us here at People's Capital Group, we can help you move that capital into an apartment building that's professionally managed in New Jersey if we find that's a fit for your investment needs. To qualify, to learn more about what we do here on the real estate side, once you self-direct your IRA and you're looking for a safe asset that's going to produce cash flow and long-term wealth gains, then you go to peoplescapitalgroup.com. You can fill your information in and learn more about what we do here at People's Capital Group and see if you qualify for a passive investment with us. And we're on the real estate side, but first reach out to your self-direct IRA custodian and check out these guys. They're great. Karen, you put all your information, Karen, and all your information.
That's okay, yeah.
Just screwed it up again. In the chat. Never gonna
Just
get it
don't
right.
call me Karen. I don't want to be a Karen.
No one wants to be a Karen these days.
Not today.
Oh man, there's so many Karens out there. What are they going to do? Oh my God.
Well, that's because, yeah, we're all moms, you know.
Right, yeah, I'd say, yeah, every Karen I know is a mom. Thank goodness for moms. All right, thank you so much. Thanks for coming on here. I hope all our listeners enjoy the Passive Cash Flow podcast. We went live today on multiple platforms. I'm going to check out here. I'm Aaron Fragnito with People's Capital Group. Check us out online for more information. Have a good day.